Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to be with you today. And if you want to open a legal trading account, please contact us through the email Vietnamstockmarket.entry@gmail.com. Telegram Vietnamstockmarket.entry with the phone number is 8491-432-6556. Or you can also scan the two QR codes on the screen so that we can support you. And the other way to contact with us is please follow and subscribe to channel name Areca Capital channel. The owner of this YouTube channel is Areca Hồng Nguyễn. She is a personal financial advisor. You can contact her with the email hongzongyuan@vcsc.com.vn with the phone number is 8491-432-6556. And we always welcome you to our office on the 11th floor, 109 Trinh Đạo Street, Hoàng Kiếm District, Hà Nội, Vietnam. And today we're going to share with you about the Vietnam Strategy 2023. And let's continue with industrial parks. Structural growth to continue, but global economic headwinds to impact short-term outlook. And let's see on the screen, and I share you that about research paper. Short-term economic headwinds in 2023, but bright prospects remain for medium and long term. Global economic slowdown to pose short-term challenges of attracting FDI to Vietnam due to tightening monetary policies across the globe. We believe global manufacturers are more conservative regarding their capital expenditure plans as demand in key consumption markets, such as the EU and the US, is expected to soften in 2023. As a result, it will be more challenging for Vietnam to attract FDI inflows in 2023, especially in the manufacturing sector. The reopening of China could have mixed short-term effects on Vietnam's position to attract FDI. On the positive side, the disruption of the global manufacturing supply chain disruption should continue to ease, in turn benefiting Vietnam's manufacturing activities and help the country to attract more manufacturers to set up facilities. Moreover, Chinese investors, manufacturers are now allowed to travel more freely to access Vietnam for their company's expansion plans. On the negative effect side, we believe the end of China's zero COVID policies could temporarily slow the need for multinational manufacturers diversify their production out of China. Nevertheless, we believe the structural shift of manufacturers relocating their production to Vietnam will continue over the long term regardless of China's COVID-19 related policies as Vietnam continues to possess competitive advantages that will attract FDI inflows. We believe structural demand growth will support well-positioned industrial park developers that have already secured large, cleared industrial land areas. We believe incumbent industrial parks developers with clear and sale-ready land banks will be major beneficiaries as they will be able to capture demand amidst the currently limited supply, especially in southern Vietnam, as well as the ongoing increase in industrial parks land prices. Average industrial land price in key industrial provinces in 2019 November 2022, remaining leasable area and percent completed land clearance of remaining leasable area of industrial park developers under VCSC's coverage as of Q3 2022. Most industrial parks developers under our coverage have solid financial positions. Industrial parks projects are normally developed and are sold over a long period that ranges from 4 to 10 years, depending on the size of the project. We have observed that the cash generation of industrial park development is skewed toward the end of the land sales process. Most industrial parks developers under our coverage had a net cash position as of end Q3 2022, including GVR, PHR, and LHE, as these companies have already disbursed CAPEX for land clearance and in infrastructure and do not have any expansion new projects over the long term. Meanwhile, KBC and DIC are planning expansions, resulting in higher leverage ratios with net debt equity ranging from 21% to 30% as of end Q3 2022. Financial positions of industrial park developers under VCSC's coverage as of end Q3 2022. 2022 stock performance of industrial parks developers. Overall, the stocks of industrial parks developers underperformed the VN index in 2022, which we believe was due to weak sentiment surrounding the real estate market and the share prices of industrial developers strongly outperforming the VN index in 2021, with the exception of PHR and GVR. Performance of industrial park stocks compares to VN index. Performance of industrial park stocks compares to VN index. Top picks for 2023. In the industrial real estate sector, we picked IDC, a leading industrial park developer that has successfully transformed from a state-owned company. PHR, a rubber company strategical shifting to the industrial park segment in Binh province, and LHG, a small cap industrial park developer trading at an undermining valuation. By IDC, we believe IDC is a major beneficiary of rising industrial park land prices thanks to its large cleared industrial park area in key industrial provinces. As of NQ3 2022, IDC had a remaining leasable area of 717 hectares, and we estimate 86% of this area has already been cleared and compensated for. We believe the remaining leasable area can secure strong land sales and profit growth over the medium term. In addition, IDC's strong profit growth outlook is supported by its strategy of being more aggressive in industrial park land sales activities and its change in industrial park land sales recognition methods that matches more with its solid cash inflows from the industrial park segments. For 2022 forward, we forecast revenue of 8.5 trillion Vietnam dong, 343 million US dollar, more than 97% year-over-year, and net profit after tax MI of 2.3 trillion Vietnam dong, 93 million US dollar, more than 403% year-over-year, which are mainly driven by finalized recognitions from the fully occupied Muonchek 5 and Mitsun B1 industrial parks in 2022 and year-of-year high one-off recognitions for industrial parkland sales. We forecast 2023 forwards revenue of 9.4 trillion Vietnam dong, 379 million US dollar, 11% compares to 2022 forwards, and net profits after tax MI of 2.5 trillion Vietnam dong, 101 million US dollar, more than 10% compares to 2022 forwards, which are primarily driven by continuing profit growth from all of DIC's core businesses. We expect year-of-year high one-off recognitions for industrial park land sales in 2023 forwards to offset the year-of-year flat plunge and finalize recognitions for full occupied industrial parks. Potential downside risks slower than expected approval and development of future industrial park projects. Phuc Hoa Rubber JSC PHR. We view PHR as a prime beneficiary from surging industrial parkland demand in fast-growing Bình Dương province, thanks to its rubber land bank that is well connected to the current road network. Based on our projections that are more conservative than PHR's land conversion plan, we believe VHR's valuation is attractive. Vietnam-Singapore Industrial Park 3 to be a key profit driver starting in 2022 forward. In 2022 forward and 2023 forwards, we forecast PHR will recognize compensation income of 691 billion Vietnam dong, 28 million US dollar, and 200 billion Vietnam dong, 8.1 million US dollar, respectively. Moreover, PHR will receive 20% of share profits from VSIP3's land sales, not less than 1.2 billion Vietnam dong, 48,400 US dollar per hectare, as another part of compensation for rubber land conversion. In addition, PHR will invest in our 20% stake of VSIP3 through a business cooperation contract in early 2023 forwards, which should drive PHR's profits over the long term. For 2022 forwards, we forecast revenue of 1.8 trillion Vietnam dong, 73 million US dollar, less than 7.2% year-over-year, and net profits after tax MI of 994 billion Vietnam dong, 40 million US dollar, more than 108% year-over-year, which is driven by our compensation income forecast of 691 billion Vietnam dong, 30 million US dollar in a year. Meanwhile, we forecast 2023 forwards net profit after tax MI of 767 billion Vietnam dong, 31 million US dollar, less than 23% year-over-year, which is mainly driven by our 71% year-over-year lower compensation income projection. Downside risk delays in future industrial park approval, lower than expected absorption rate of industrial parkland, further declines in natural rubber prices. Long haul JSC LHG. We believe LHG is our main beneficiary from high demand for industrial parkland in Long An province and Ho Chi Minh City. In addition to its valuable cleared land bank in prime locations. We believe LHE is well positioned to capture industrial park land demand as the neighboring food industrial park faces legal obstacles. We we expect long haul 3.1 industrial park to be a key earnings driver in the short and medium term. We estimate that LHE clear and compensated for at least 38 hectares of industrial parkland in LH 3.1 as of Q3 2022 worth 2 trillion Vietnam dong, 84 million US dollar. We estimate that an ASP of 220 US dollar square meter per ton. Attractive valuation for a cash-rich industrial park developer, even as we apply our sharp discount to our RNAV valuation. As of Q3 2022, LHG has a net cash balance of 1.1 trillion Vietnam dong, 44 million US dollar. 98% of the company's current market capitalization. Although we apply a significant valuation discount of 40% to LHG's RNAV valuation and conservatively remove its future projects from our valuation, we believe LHG is trading at an attractive valuation. For 2022 forward, we forecast revenue of 768 billion Vietnam dong, 31 million US dollar, less than 1.8% year-over-year, and net profit after tax amount of 271 billion Vietnam dong, 11 million US dollar, less than 8.5% year-over-year, as we expect the year-over-year decline in land sales recognition and a year-over-year contraction in NPM that will be partially offset by year-over-year increases in financial income and net other income. We forecast 2023 forward revenue of 777 million Vietnam dong, 31 million US dollar, more than 1.2% year-over-year, and net profit after tax amount of 325 billion Vietnam dong, 13 million US dollar, more than 20% year-over-year. We expect top line growth to be mainly driven by a recovery in ready-built factory revenue, while the bottom line will be supported by a normalized GPM in 2023 forward after an abnormally low base caused by non-recurring cost recognitions. Downside risks lower than expected absorption rate and industrial park land ASP higher than expected land clearance payables. Appendix company names and tickers: GVR, IDC, KBC, LHE, PHR, and SZC. Yeah, and that brings me to the end of my presentation today. So if you want to open a legal trading account, please contact us with the information on the screen so that we can assist you. So thank you for your listening and see you next time.